Hey everyone, welcome back. Today, we're breaking down the Walt Disney Company's Q3 2025 earnings report, dropped on August 6, 2025, for the fiscal quarter ending June 28, 2025. It's a tale of streaming wins, park power, and some TV troubles. Let's dive into the numbers across Disney's entertainment, sports, and experiences segments. Disney's total revenue hit $23.7 billion, up 2% from $23.2 billion last year. Net income doubled to $5.6 billion, pushing earnings per share to $2.92, way up from $1.43. Adjusted EPS, excluding one-time gains like a Hulu-related tax benefit, was $1.61, beating Wall Street's $1.47 estimate. Revenue, though, fell short at $23.65 billion against $23.73 billion expected. The entertainment segment, covering streaming, TV, and films, grew 1% to $10.7 billion. Disney Plus and Hulu's streaming unit turned a $346 million profit, a big shift from past losses. Disney Plus added 1.8 million subscribers, hitting 128 million, while Hulu reached 55.5 million, totaling 183 million subscriptions. Disney's now focusing on profits, not subscriber counts, and will stop reporting individual service numbers by late 2025. Theatrical results, however, slumped, posting a $21 million loss versus last year's $254 million profit, dragged by Elio's week $21 million debut. Lilo and Stitch, though, soared to $1 billion globally. Sports, led by ESPN, saw revenue drop 5% to $4.3 billion, hit by the Star India deal, leaving Disney with a 37% stake in a Reliance joint venture. Domestic ESPN revenue rose 1% to $3.93 billion, but operating income fell 7% to $1.01 billion due to costly sports rights. ESPN's pushing forward with the ESPN Unlimited, a $30 a month streaming app launching August 21st, plus an NFL deal giving them a 10% ESPN stake and WWE events on the platform. The experiences segment parks, resorts, cruises shined, with revenue up 8% to $9.09 billion and operating income up 13% to $2.5 billion. Domestic parks, especially Walt Disney World, grew revenue 10% to $6.4 billion and operating income 20% to $1.65 billion, boosted by guest spending and the Disney Treasure Cruise. International parks dipped 3% in operating income to $422 million, despite a $40 million Easter boost. Disney spending big, with $30 million in pre-opening cruise costs and $185 million expected for 2025. Looking ahead, Disney upped its full-year EPS guidance to $5.85, targeting 18% growth. They expect over 10 million more Disney Plus and Hulu subscribers in Q4, with Hulu merging into Disney Plus. Traditional TV revenue fell 15% to $2.7 billion, and international parks faced softness. CEO Bob Iger emphasized streaming and park expansions, but the stock dipped 2% pre-market. That's Disney's Q3 to '05. Streaming's profitable, parks are strong, but TV's struggling. What's your take? Will Disney's baits pay off? Like, comment, and subscribe for more.